and that one reported a lackluster set of numbers. Reema, take us through the key details.
Well, one, there are numbers which are looking quite lackluster, and then there is a buyback which has got the stock excited, which is why Cognizant ended up nearly 5%. But first on the numbers, the dollar revenue growth was only about 0.3% in the December quarter. In constant currency, it was a growth of about 1%, which means lower than what the TCSs and HCLs of the world delivered. It's also at the lower end of the company's guided band of 0 to 1.7%. On the full year performance, CY16, they've ended at 8.6%. Again, it's not a great performance. They'd started the year with a guidance of 10 to 14%, and they progressively tweaked it down and finally ended with a growth of 8.6%. Their next year guidance is at 8 to 10% only, which means that there is no acceleration in demand that we should expect. There is significant acceleration. 8 to 10% next year versus 8.6% that they've delivered in the prior year. On the good side, they plan to improve their non-GAAP operating margins to 22%. Currently, the guided band is 19 to 20%, and they ended last year with 19.5%. So they plan to improve their margins. What got the street very excited is their plans to return cash to the shareholders. They plan to return $3.4 billion to the shareholders in a period of about 2 years, which is a combination of buyback as well as some dividend. And that is a huge buyback, which is why that stock ended up close to about 5% in trade yesterday on NYSE. Well, the impact on the Indian IT, the Q4 performance was lackluster. The guidance for next year is nothing very exciting. But I think Cognizant coming out with such a large buyback might put pressure on the Indian IT companies in order to better their capital allocation policy. There is a clamor for buyback even from the Indian IT companies, and now that Cognizant has done it, I think the pressure only intensifies on the Indian IT companies, and expectations will go up that they too will follow suit with better capital allocation.
All right.